So here in the previous class we have discussed about few topics like posting profile. So we have discussed this books topic yesterday, how to create books, and we also discussed about derived books. We have created fixed asset groups earlier itself. Then fixed asset posting profile we have configured for the vehicles, and we have to configure for the furniture and fixtures maybe. Then we'll create this fixed assets and we'll try to acquire the fixed assets. So let's see how we can do this one today. So we have fixed assets module and posting profile, right? So fixed asset posting profiles is here. So we have yesterday configured the accounts related to the vehicles group. So we will today configure the accounts for the other book, I mean the other group of fixed assets like furniture and fixture. So let's do that. Again for acquisition, just clicking on add, I'll select Companies Act book and select group again. So I'll select F&F, furniture and fixtures, right? Furniture and fixtures. So main account, I did not create any main account for furniture and fixtures. I'll do it now. So 1,61,000. Set furniture and fixtures. Okay. So it is an asset account. So I'll just change it to asset and I'll save it. All right. It's not that easy that you will create accounts, new accounts in chart of accounts. Normally you might need lot of approvals for creating such accounts actually in business. So there's some of the accounting heads have to approve you for creating such accounts. So that would be a kind of procedure, but here we can simply create since we don't have any approvals or we don't require them. Just close it. Given main account here, the furniture and fixtures account, I just gave it here. Then offset account, it varies, right? As I told you, if you are buying it from a vendor, it will be vendor, or if it buying it from with a cash account, it will be cash account. So it depends. So I'm not giving any offset account for the acquisition. Again, for tax act book group, I'll select the group. Come on. The group, I'll select F&F. So I'll select the same main account to be assigned here in the main account field. In the same way for acquisition adjustment, we can give the same Companies Act book group furniture and fixtures and that account 1,61,000. Tax Act group furniture and fixtures on the same account. Then coming to depreciation. So I am using the same accounts for depreciation. I did not create separate accounts for depreciation vehicles and depreciation furniture and fixtures. So I am using the same. So go to group. I'll select the same furniture and fitting and I'll give the main account here as the accumulated depreciation account as we know it already. And the offset account as the depreciation account here. Depreciation expense account, this one, which is a profit and loss account or the expense account. So go to tax book again, group furniture and fixtures, the same account here, same account here. So not this here, right? Then for depreciation adjustment also, let's do it quickly. Companies Act group furniture and fixtures, same accumulated depreciation account and the depreciation expense account. For tax act book Same group, furniture and fixtures, same accumulated depreciation account, and this one, depreciation expense account. For revaluations, write-ups, write-downs also, you can give the same kind of accounts. Like for write-ups, you can give your current act book. Again, select the group and select F&F. So which main account that I have to give here in the write-up adjustment main account? So what we have given here for the vehicle group. So what account this is? You can see this is fixed asset vehicle. So what we have to give here in the main account field? Anyone?
Fixed assets, furniture and fixtures.
So fixed assets, furniture and fixtures that we have, right? So 1,61,000. I'll just give it here. And the offset account is the same. Write up and write down reserve account. I'm just selecting it. So tax act. Can select group, select F&F. Same account here. Account here. In the same way, for write down depreciation also, I can give it quickly. Let me do it. Okay, what else we left over? Revaluation, right? So let me give for that also quickly so that we can complete it. Group, furniture and fixtures, 1,61,000, and offset account as the revaluation reserve account. I'll just give it here. Tax act, group, F&F again, and I'm in the same account 161, and the offset account as revaluation reserve, right? So that's how I have configured the accounts related to various transactions in fixed asset posting profile. Then later when we post transactions, I'll show you each account. I mean how it is taken into the voucher. So I'll imply it, no worries. So the next configuration that we are left over to do is fixed asset creation. So we have to create fixed asset codes in the Dynamics. So we can create fixed asset codes through fixed asset module. We have here under fixed assets I have fixed assets, and fixed assets. Can click on fixed assets. It's three fixed assets, and fixed assets. See, it's empty form here. I don't have any fixed assets that I have created. So first we will create fixed asset, then we will post transactions for the fixed asset, just like vendors. So the main entry that we have to post for a fixed asset is acquisition, because when we buy only, then only we'll have the following entries like acquisition adjustments or depreciations or write-ups or write-downs only. We will have them only when we have acquisition of the asset. So the primary transaction that we do in a fixed asset will always be a acquisition transaction. So let's see first how we can create a fixed asset. Here there were certain master details in the fixed asset that we can also give or assign. So I'm just creating a fixed asset new here, as you can see. So it is asking me a fixed asset group to select a fixed asset group. So I'm selecting this group vehicle here. First option. As soon as I select vehicle, I can see the number here automatically getting assigned. So any idea how it is getting assigned automatically? Anyone?
We have given the number sequence code were created in the fixed asset group.
Yes, in the fixed asset group. So if I click on it, this is the fixed asset group. See here, I gave this option as auto number fixed assets, and I gave a number sequence code. So if I do this, automatically number will be picked here for the fixed asset that you create. Next number will be MRF vehicle 002. Okay, So if you don't give that auto number fixed assets, you can manually give the number here, any number that you wish. But in order to not to lose the sequence or not to go out of the format, we can use the auto number fixed assets option, so that fixed assets that are created will be numbered in a proper format and sequence. Okay, you can give the name of the asset here. Okay, I'm just giving it as Benz truck, one of the truck name. So it's a vehicle, right? So I just give it as Benz truck. So you can select what is the asset type: tangible, intangible, financial, land and buildings, goodwill and other. So it is tangible asset, as we all know. So select that as a tangible asset. Major type, yeah, normally the major type was selected from the vehicles, right? So you can let it be, or you can, I mean, it was selected from the group actually. So you can let it be here, or you can take it off, no problem. Property type is fixed asset. It's not a continuing property or anything. So it's fixed asset. Again, this information is also coming from group only. So the quantity here, how many quantity of trucks you are buying? It's only one truck. So I can give it as one truck. There are certain situations where you will have a lot of goods, like a dozen of lights you have bought, suppose. So you will create one asset as lights and you will give 12 quantities. So 12 fixed assets are 12 lights are categorized as a single asset. And if there is any small bunch of assets, bunch of goods that you are grouping as a single asset, so you can give that quantity here if you want to. So here it is a big asset like a Benz truck, which is of a single quantity. You can give unit of measure also. So in this case, appropriate unit of measure is each, means one each. Or so there can be cages, there can be liters if there is any such particular type of good or particular fixed asset. So some fixed assets can be measured in cages, like 10 kgs of ore, or liters, tunnels of what, I mean liters of oil, crude oil. If there is anything like that, you can create them. So for that, you can give this quantity and my unit of measure. Unit cost here that you give is not required actually, but you can give a unit cost like 5 lakhs. So this does not really affect any finances or accounting. It is just for maintenance sake only. You can add some amount here. Any amount you can add here under the unit cost, but it will not really affect anything, or it will not cause any financial impacts or anything, or it is not useful also in anywhere normally. So that these are the, I mean, the most important that you have to give is the fixed asset group, first one. So if you, that is the only compulsory. If you, even if you don't give name also, you can save it. But fixed asset group is compulsory. Group and fixed asset number is both are compulsory things, these two. Now if I saved it, I can see here it is saved on MRF vehicle 001. Name is Benz truck. Then you can give some activity code, asset activity code. Normally, I'm not sure why these are assigned actually property groups. So I think these are more filters that you can give, or the kind of categorization that you can give for the asset. What are the activities that are done on this? You can give asset activity code as like transport assets. For machinery, you can give first level machinery for processing, second level machinery for packing, third level machinery. So that activity of the asset, you can add it here, I guess so. Then if I come down from the general information, this is the general information that I have. If I close this menu, I have some technical information. Technical information means these are also maintainable fields only. It's not compulsory that you have to fill all of them, but you can maintain some information. Make, who made this one? So it was make of bench, model 2020 model, or you can say the model name actually. So you can say 14 tire, then model 2020, serial number if there is any, like you have, right, for vehicles you will have these numbers, bike number and car number. So you can give that serial number of the vehicle if you want to. Or for machines, if there is any unique numbers, you can give that number also. Guarantee date. So if you have any guarantee until so and so date, you can give. So I have a guarantee until December 31st. So what is the guarantee date? Technical information 1, 2, and 3 means any other information if you want to add additionally. Like for in case of mobiles, normally you have, right, black and configuration 28 GB, then 128 GB RAM and 5 GB RAM and ROM. So you can give those details if you want. For vehicles, you have sometimes for machinery, you will have some technical information. Mostly you can give them. Here you can maintain some other details of when was it last maintained. Suppose let's say that servicing was last done yesterday. So what will be the next servicing date? So next servicing date will be next month 16, December 16. So you can give that servicing dates of the vehicle, or for machinery maintenance in case if there is any repairs or services to be done, it can be given here. Other any information, additional information if you want, you can give additional information. You have some fields for asset additional information. You have asset condition. So normally you can create asset condition. So in which particular condition asset is. So like you can say 01 asset is working condition. Okay. 02 damaged. 03 repair. 04 means it's not of any use. So I can create 4. So now I can give one asset condition here, like it's in working condition. I can assign such kind of condition for the asset. In which particular condition asset is. If I say asset is under repair, I can give it as under repair in this, so that someone who visits this asset master can understand all the details. Give it as working. So I can close this one, technical information. Other than this, I have some insurance details. So you can give the insurance vendor. If you have that vendor created in your vendor master, you can give that vendor name here. From which vendor you bought the insurance for this fixed asset. So who is the agent of the insurance? You can give the agent name, policy number, policy expiration date of the insurance. For vehicles, you normally have right insurances. Then you can give the policy amount, how much value you insured it for, what will be the replacement cost if you want to replace the fixed asset, or the insurance replacement cost actually. Then last periodic value or cost update, you can give this date here. Then insurance 1 date and insurance 2 date if you have multiple. So you can give that in basic insurance details. This is also maintainable fields only. So you can just give the policy numbers and the amount of insurance that you have insured for the fixed assets, so that it will be available whenever you want to make any report out of it. You can extract this particular details related to all the fixed assets and prepare a report quickly, so that you can check all the insurance policies available for different fixed assets in your business. It would be easy if you maintain such details. Other than insurance, I have location. We have certain details of location again here, like in which location it is located in. So you can create some locations in your business, like building 1, building 2, building 3, warehouse 2, or you can give such kind of location. Suppose I'll give this one 01, yes, warehouse. You can give that address here, which warehouse address you can give here. You can copy this code, go back and assign it here. So this vehicle is normally in such warehouse, or it will be normally placed in such warehouse all the time. You can give some location memo. Memo means details of the location. If at all it is in some room number, like if it is a computer in a room number, you can say it's in building 4 and room number 3. Under which department take care of it, you can select. Departments are, these are auto generated actually. You can say finance department is having this vehicle. Normally vehicles will not having finance department will not handle vehicles, right? So I'll select some other department like service operations department. The person who is responsible, you can select one of the employee who is responsible for this vehicle. Normally if you create the driver as the person who is responsible for the vehicle, if you create him as an employee, you can see that employee name here in the list of employees. So you can select that particular employee name who is responsible for this vehicle. Barcode of the vehicle in case if there is any barcode that you have assigned. Then we have this one, missing asset. Missing asset means suppose if there is any fixed asset audit is done and if this asset went missing, so you can enable this option that this asset is missing. So you can make it as yes, and whenever you identify it again or you find it, you can again come back and disable it. That this asset is available now, not missing again. So that's how. Physical inventory, when was the audit done? You can say the last audit was done on 15th of November. So this asset was not missing. It is present. You can say contact details, who is responsible person's contact details or the person to whom to contact for this vehicle. You can give it here. The same ID you can give if you want to. Suppose if this asset is leased to somebody, you can give that lease notes here. Title holder, who is the person who is holding this particular fixed asset. Leased means this kind of lease that we have here in Dynamics is like you can lend your assets to your employees itself. Suppose if this computer is lent to me, suppose company will have some 100 computers, let's assume. So they have given each computer to each employee. So you can give the title holder name who is having that lease of the asset. GIS reference number is the location details only again. Normally location details in that according to that GIS what is that location app, that one. Parcel ID, in case if you want to mention any parcel ID, you can mention it here. Report sorting, so there are some fields that are available for reporting actually, only for some kind of additional fields that you can use in reporting. So you can create any details here like sort field, you can create any kind of identifications, descriptions, so that when you assign them and when you generate report, these fields also will appear. So you can sort out your assets, or what you can do is you can filter your assets using these fields if you want to. So these are the additional fields that you have that you can configure and apply, so that while preparation of reports, these fields also will be appearing in that report, and you can sort it out according to these fields, sort out your fixed assets. So as per the convenience, these are available. It's not compulsory that you have to maintain. Then reference and notes. So any reference for the fixed asset, any comments related to it, document location, disposal restrictions. If you are going to sell it, do you have any conditions and restrictions? You can mention it here so that someone who is going to sell it can refer this references and notes. That's what. So structure is one we have actually. This is a situation where certain miscellaneous fixed assets are bought or subsidiary fixed assets are bought into, group them as a machine. Suppose let's assume that this is not a vehicle, this is a mouse. Mouse means a hand mouse. I have, right? We normally use mouse. So this is for the set of computer and CPU that I have. So that computer is created as another main account. Let's assume another main account is here, computer number 2. So I'll select computer number 2 here. So that what it means is this particular fixed asset mouse that I created here is part of that computer or is into that set of computers. That is called as main account. Sometimes you can buy some additional parts to some machinery. So main machinery will be somewhere. So you will buy this additional part as a subsidiary part and you will install it to the same machine. So if you want to maintain that subsidiary part as a fixed asset, you can create a separate fixed asset and you can give that main fixed asset number here so that someone can easily identify to which fixed asset it is linked to. So that if they could not identify it, they'll go and refer that account and look into the additions made to that account or the attachments or installations made to that account separately. If this particular asset is there on that main fixed asset or not, or if somebody go and check computer number 2, desktop number 2, at desktop number 2, the particular mouse asset is there or not, they can identify if they give it the main account here. Then you can give an image. So I see an image is automatically showing up the Benja truck already. Actually, this image is automatically taken from the fixed asset group. So in the fixed asset group, I gave this image. By default, it is taking up from there. I could have removed that image because I will have different images for different vehicles, right? I won't always have the same image. So I can do that. I can delete this from here and I can upload another image also. It's my wish. Okay, this is one option I have. So these are the few menu details that we have in fixed asset. All of them are optional, nothing compulsory to be maintained. But sometimes maintaining them will be helpful for tracking and preparation of reports and easily extracting the data that you require. Other than that, we have some options here. Actually, we'll see all of them, no problem. But before to that, first I'll show you this one, books, which is important. Whenever you create any fixed asset, you have to ensure that a book is assigned to the fixed asset. Normally you have linked the books to fixed asset groups, right? Yesterday after creating books, we have linked it to the fixed asset groups. So automatically that for that vehicles group, if the books are linked, that will automatically appear here on the asset. So let's see for this asset if that Companies Act book and Tax Act book are showing up automatically or not. If I click on books, it will show me here. See, for vehicle number 1, Companies Act book is added. For vehicle number 1, again Tax Act book is also added. See, but it is not showing posting profile because we missed one setup. I'll show you. Anybody have any guess what it could be, the missing setup with this? That's the very important setup that we do in all the modules when we configure the posting profile. After configuring the posting profile,
given that in a parameter, that posting profile we have to given up the parameter.
Correct. So we have to give that posting profile in the fixed asset parameters here. For customers and vendors also, we normally give right vendor posting profile, customer posting profile in the parameters of AP and AR. In the same way, for fixed assets also, we have to give that posting profile here. Accounting rules, general posting profile. Got it? This one. So now it will show up automatically, but now not on this asset because here we missed it already. So I'll just give it automatically. And for the other asset that we create, it will take automatically. So let's see the structure of the book. See, for first Companies Act, we'll see. For Companies Act, I can see Companies Act book name. Posting is into current layer. Yes, okay. Depreciation rounding off to 10 cents. Okay. Allow net book value higher than acquisition cost. Okay. Allow negative book value set to no. Okay. Then this is important. Asset status is still showing as not yet acquired. Not yet acquired means asset is not, or acquisition entry is not posted at, or it's not acquired at. If at all you buy it or post acquisition entry, the status will show as open. Okay. If you sell it, it will show as sold and scrapped if at all you sold it. So there were different status. I'll show you later. Once after acquiring, I can see the drop down actually. So I'll show you that. Then I have posting profile. We know this common. Then the acquisition date of the fixed asset, on which particular date that you want to acquire the fixed asset for, or in which particular date you are buying the fixed asset for. So you can say I am buying it from November 1st or buying it on November 1st. So this one is important. Acquisition price, for which amount you are going to buy the fixed asset for. You can say 5 lakhs is my acquisition price. So 50,000 it took. $5 lakh is my acquisition price. So acquisition method we can select. Actually, we can create multiple methods of acquisition. There are different methods of acquisition. I'll tell you them. So I can use this acquisition methods. I can create all of them and I can use one of them. Then disposal date. In case if you are selling it, a disposal date you can give it here. You don't need to give acquisition date, price and disposal dates all. When you post any acquisition entry, automatically that acquisition date will be taken here and that amount will automatically come into this field. No, you don't have to manually give it here. If you are acquiring the fixed asset means using fixed asset journal, that will automatically appear here. But I can also give it manually. Later, if you acquire it for another price, so it will automatically change. Suppose if I acquire this fixed asset for 4 lakhs and an entry is posted, then again this acquisition price will all change from 5 lakhs to 4 lakhs here automatically. And if I'm acquiring it for another date like 2nd of November, the date will also change to 2nd of November here, not 1st of November. That's up. Then sale value. In case if I sell it, I'll definitely see the disposal date, sale value. Replacement date means if I replace this fixed asset with a new fixed asset, or if I replace this vehicle with a new vehicle, I can give that replacement date here. Or there is an option to update the replacement dates. Actually, I can do that. Then provisions, you can create some provisions for your fixed asset like depreciation provision, insurance provision, damage provision. You can create any provisions. Provisions means the expectation of loss on the fixed asset, and you can create some reserves. So that can be under provisions. So mostly applicable for any sensitive fixed assets or perishable goods like that. But we can also do it for the normal strong fixed assets also, up to the requirement of the company. So that's all there in the general menu. Coming to depreciation menu, you can see here straight line service life is picked up automatically. From where it is picking straight line service life method here? Any idea? Where we have given this depreciation profiles to where we have linked the depreciation profiles initially, in which particular configuration?
Fixed asset groups.
No, actually not fixed asset groups. It's in book. We have linked.
Okay.
So book contains all the details. As I told you earlier, book contains all the details of which depreciation methods has to be followed, what is the service life. Service life, normally you can see it here. So here in the books, this is also called as book only. Here you can see all the details, acquisition dates, prices, then the net book value of, not net book value, the depreciation methods and the service life of the asset. You can see all of them here in this particular book. So depreciation methods are taken from books actually, or depreciation profiles are taken from books. Actually, before to Dynamics, there is AXR3 version. In AXR3 version, there is no concept called as books. There is a concept called as value model. Okay, instead of books, there is a concept called as value model, VALUE model. So what this value model does is, in the value model, you will have both book related features as well as depreciation features, both of them combined. So you don't have separately depreciation profiles and you don't have separately books. Both of these depreciation profiles and books is combined as value model earlier in the previous version of Dynamics, not in Dynamics actually, AXR2 R3. So now there is change since after the Dynamics change of Dynamics into web version, and then the new version is deployed. So from there is separation called as books and depreciation profile separately. So if somebody is asked what is value model, you can say that it is a before to the earlier update of Dynamics. It's the books and depreciation profiles are grouped into value model. Okay. So remember that one. Then here I can see the straight line service life method, alternative depreciation method, then the extraordinary depreciation method is automatically taken. So calculate depreciation. Yes, we have to calculate depreciation on this asset. Then I have one information here called as placed in service. So any idea what is placed in service? Anyone?
From when the depreciation to be calculated?
Correct. From when the asset is being used, and from the same day depreciation will be calculated. So for that, actually we have this depreciation run rate also, but most of the time both will be same. Suppose if I change it to second, so automatically depreciation run rate will also change. So let's assume that I am buying a fixed asset on 1st of November only, but I am placing it into service on 1st of December. Right, I am not using it in 1st of November. I bought it and kept it aside. I am using it only from 1st of December, and I decided to depreciate the fixed asset only from 1st of December. From the day I started using it, from that date only I want to depreciate it. So I can give the placed in service date as 1st of December, and depreciation run rate will also be equal to placed in service date. You can change the depreciation run rate if you want to, but most of the time it will be same, or people maintain it to be same. So you can use in that way, so that now if I run the depreciation will be calculated from the month of December, not for the month of November. For the month of November, it will exclude. But I want it to start from 1st of November itself, so I will just give the same date of the acquisition date. Okay. So depreciation date when depreciation was last run. So when was the last time you have run the depreciation for this asset and posted? You can see it here normally, but you don't see anything here because we did not run the depreciation yet, right? Once we run it, we can see it here. Then service life of the asset 5 years. 5 years means 60 periods because it's monthly calculation of depreciation, right? So number of depreciation periods is 60. Depreciation periods remaining is also 60 because you did not calculate any depreciation at all. The 60 are pending, so it shows as 60 only. Suppose for 2 months if you run the depreciation and posted already, so it will show the remaining depreciation periods as 58 after deducting that too. So in that way, expected scrap value, you can leave some of the asset amount as a scrap value, so that salvage value, so that depreciation will not be calculated on the 10,000 or any amount that you give here. So asset will be depreciated until 4,90,000, leaving over this 10,000 as a non-depreciated value. So you can give that. Mostly in India, they'll maintain 10% of the asset value as a scrap value. 10% here means I can maintain 50,000, I think. 10% or 5%? 5%, I guess so. So I can maintain like 25,000. It's up to some people won't maintain also, up to their requirement. So I just take it off if I don't want it. So depreciation convention is a functionality what we have. So this is a situation where most commonly used in tax books. If at all, if an asset is bought in between the year, or if at all an asset is bought in the middle of the year or in the middle of a month, how depreciation has to be calculated. See, if it is bought on the 1st of November, like I told, for entire month depreciation will be calculated. What if the asset is bought on 10th of November? How depreciation has to be calculated? Does the depreciation has to be calculated for the 20 days, or depreciation has to be calculated for the entire month, or for half of the month, or that particular month's depreciation has to be left over since you bought it in that month, in the middle of the month? So depreciation will start calculating from the next month. So that kind of conditions are here actually. So after we acquire a fixed asset, I'll come back and show you this conventions part. Actually, we have a documentation also for the conventions. I'll explain you and I'll share you the documentation as well. So allow depreciation when placed in service and disposal are in the same fiscal year. So normally some people doesn't really depreciate fixed asset when the placed in service date and asset sale date are in same year. So sometimes they will run the depreciate it for 2-3 months, and suddenly if they want to sell it, they will reverse the depreciation actually. Or suppose if you give a disposal date, like if you want to sell it in this particular year itself, then depreciation won't be calculated on this fixed asset. So you can say that allow depreciation when placed in service and disposals are in same fiscal year. So you can allow it. By default, it will be no. If you want to allow it, you can allow it. Mostly, so this to say, they don't calculate depreciation on the asset that are sold in a single year according to Tax Act. I think for Companies Act, they have to depreciate them anyway. But for Tax Act, sometimes they have this regulation that an asset bought and sold in the same year should not be depreciated. So for that rule, you can use this one. I mean, it will be set to no only all the time. You can keep it as yes if you want to. So here you can keep it as yes if you want. Create depreciation adjustments with basis adjustments. We have seen this option already. I told you, if at all a depreciation is posted for the fixed asset until the complete year, and if there were any changes that has to be made in the acquisition value of the asset by acquisition adjustment, so depreciation will also be calculated for the adjusted value for the remaining periods in that particular year, which was already posted. But for the acquisition adjustment value that you are going to adjust, for that also depreciation will be calculated and posted. That's what. Extraordinary depreciation. If at all you are running extraordinary depreciation or for this asset at any time, so you will see that extraordinary depreciation date here normally. Once you run it, you will see the date here. Then if you have this option, vendor account purchase order invoice, normally you can also buy a fixed asset or acquire a fixed asset through a purchase order, or you can also acquire it through a vendor invoice journal. So if you buy it through a purchase order, or buy it from a particular vendor, you will see that vendor name and purchase order number and invoice number here actually in this particular fields. Now these are not available. They will be automatically filled up if you are acquiring the fixed asset through a purchase order. Then I have sales, customer and invoice. If you are selling a fixed asset to a particular customer in your company, so you can see that customer account and the invoice through which you have sold the customer. You can sell it through free text invoice actually, not sales order invoice. You can sell it through free text invoice. So then you can see the customer account number and free text invoice here. Then you can give the default financial dimensions for the fixed asset. So you see in the fixed asset master, you never see these default dimensions. Only in the books you can see these default dimensions. So you can give a department and location if you want to. So that whenever you are doing any transactions with this fixed asset, automatically that values will be reflecting or they will be taken automatically. So I'll say vehicle is normally used by sales and marketing department. I'm using it. So it's for Hyderabad, suppose. I'll give Hyderabad. So that's all. So this is all for Companies Act book I have given. Again for Tax Act book also, if I have some change in parameters, I'll give it. It's the same acquisition date. I'll give it as November 1st because I'll acquire on the same date, right, in both of them. Then I can depreciation profile is different here. So you can see reducing 30%. There it was straight line service life method, and I don't have any alternative depreciation here for the tax book. And the extraordinary depreciation, okay. Calculate depreciation, okay. Placed in service 1st of November, the same. Service life 5. And depreciation periods it is showing as 5 because normally for the reducing balance we are going to calculate depreciation on yearly basis, not on monthly basis. So in the tax for the tax book, so we can run it for the year, entire year if you want to. Or you can also maintain monthly if you want to. So that is also works. Here this is showing 5 periods only because it's for 5 years. In this particular depreciation profile, we have given calendar and monthly only, right? But why it is showing yearly then? Okay, let me save it. Let me go back, change the depreciation profile. Then give it again to reducing 30. Change the service life of the asset. Then I'll change it back to 5. Now I can see 60. And depreciation periods remaining, why it is showing 5, it should show 60, right? So I can manually change it. There should be some glitch actually. That's how I can give it. Again, hello depreciation when placed in service and disposal are same here. For Tax Act, I'm not allowing it. I don't want to. Then dimensions, I can give the same department, sales and marketing, location, Hyderabad. So both are different for both books. Now you can also see the transactions that are posted for this book. So, or you can also remove the book if you want to see. For this asset, you only want to maintain current book, not tax book. You can select tax book and you can delete it. But you can only delete it when you don't have any transactions posted for the book. If you have any transactions posted, you can't eliminate that book again. Remember that.
But we have given linked the derived books and derived books, right?
Yes, we have linked it. So in that case, while you post any transactions for this asset, it won't find any book, or it won't consider that book even. If you delete it also, it won't consider. Okay. So I can see for transactions posted in this book, for both the books, transactions are separate, right? So first of all, I have to select one book and then click on transactions. So I don't see any transactions till date because we did not post anything. Once we post it, we can see them as acquisition transaction, depreciation transactions, or anything, we can see them here. Then I have this one, balances. So balance of the book I can see. See, it will show 0 balances. Acquisition is 0. Acquisition adjustment is 0. Depreciations are 0. Everything is 0 because we did not post any transaction yet. So balances will not be reflecting. So everything is 0 here. Then I can see profile. In the profile, you can see the depreciation calculation actually. See here. Asset is So from 1st of November, you can see asset was bought for 5 lakhs, right? So you can see the net book value of the asset as 5 lakhs. On 30th of November, this is the depreciation calculated 8.33. Any idea why 8.33? Anyone? So straight line service life method we are using, right? Primary depreciation method. Any idea? So I'll show you through calculator. So what is the equation in straight line service life method? It's 5 lakhs divided by 5, right? Every year it will be 1 lakh depreciation. Correct? So yeah, every year it will be 1 lakh depreciation. Now we have monthly, right? So it will be divided by 12 once again. 1 lakh divided by 12 is 8,333. So every month you have 8,333.30. So by the end of the year it will be 1 lakh. Like that.
So if you have given salvage value, then it will be on deduction after the deduction. It will be on that amount, right?
Yeah. Suppose if I go back here, and if I give scrap value will be, I am just giving the scrap value as 1 lakh. See 1 lakh suppose here. So now I can see profile again. So now you can see profile. 5 lakhs was the net book value. So but the depreciation is calculated differently, you can see. So it is only considering 4 lakhs for the depreciation. So if I can go for the calculation here, 4 lakhs divided by 5 is 80,000, again divided by 12 is 66.70. So it's 6666.70. So it rounded off to 10 cents. We told, right, round it off to 10 cents. So it rounded off to 10 cents here. 6,666.70 every month. So as far as you go, it will be the same, but at the last month again there will be slightly less amount remaining after leaving over the net book value of 1,000. So this is the without depreciation value, right? Scrap value or the salvage value. So that amount will be adjusted in the last month, like 832.10, like that. Remaining depreciation amount will be adjusted in the final month or final period. So you can see for every month and every year you see the same value. Straight line service life is like that. And the most important thing that you have to notice is, I'll come back to that. So before that, I'll just change the scrap value once again and make it to 0. Save it and go to profile once again here. Here you notice this is the primary depreciation method, straight line service life. This is the alternative depreciation method. We are using 125% method, right? Alternative depreciation. So this is the alternative depreciation method. So how it will calculate in the alternative depreciation method? 5 lakhs. 5 lakhs. Upon 5 lakhs, 25% will be reduced, right? Yeah, 125 by 5, 25%. So it will be I'm sorry, 5 lakhs into 25%. So it is 1,25,000. So 1,25,000 divided by 12. So normally it is divided by 12. Then why I am getting this one? Sorry. So 1,25,000. Come on, 1,25,000. 1 lakh. Okay. 25,000 divided by 12. How much it is? 10,416, right? So this 10,416 is only for 2 months. 2 months. Why 2 months? Because in the year, in the fiscal year and the calendar year, only 2 months are remaining. See, only November and December are remaining. So for November and December, it will calculate this amount. For the next year, it will consider this amount as the base value for the calculation of depreciation. Suppose this amount is 4,79,166 at the end of the year. Okay, so I'll just paste it here. So into 25%. It is showing 20. So into 25% is this much.
No, 2.
No.
5%.
So into 25%. So 1,19,791 as I can see here. So this is again divided by 12. Come on. It is showing wrong. Let me do it once again for you. Clear this one. Go here, copy the value, go to calculator, paste it. So upon this 25% is calculated. 1 lakh, this one. So on this again, so 1,19,791.65, right? Just want to copy it. It's not happening. So this will be divided by 12. 197.91.65. 197.91.65, right? So divided by 12, you can see 9982.63. So it is rounded off to the nearest 10 cents backward rounding. 9,982.60. 9,982.60 for the entire year. Okay, on the net book value, by the closing net book value of the next previous year, upon that it will calculate the 25% depreciation and it will apportion it for 12 months equally. In the same way, for the next year's 2023, it will take this amount 3,59,000 the closing net book value of the asset by 2022. On this 25% will be calculated and it will be divided by 12 once again. That's all. So the thing that you have to identify here is, here it is considering the depreciation. So what system is considering here, whatever is the bigger number in both of them, in the primary depreciation profile, in the alternative depreciation profile, in both of them, whatever is the bigger number, system is considering that for the depreciation, as you can see here. So system will consider that for the depreciation. So for the first month, it will depreciate according to this method, because here the depreciation calculation is higher. Same way, when you scroll down in the straight line method, depreciation calculation won't change, right? But coming to the 125% method, depreciation calculation will get reduced. It is 125% reducing balance method. So it will keep on reducing. Coming to the 2023 until 2022, depreciation is higher in this method, alternative depreciation method, 125% method. But coming to 2023, you can see depreciation is higher in the straight line method. So system will consider that balance here, or this particular number here, because comparatively this is the higher calculation in this method. So when you use two different depreciation profiles in a single book as primary and alternative, this is what happens. It will represent the balances according to two different methods of depreciation, two different profiles of depreciation, and it will consider, system will consider the value wherever it is high, calculated value is high, wherever it is high, it will select that value for depreciation. Here, as you can see, this is the accumulated depreciation, whatever is higher here. So this is considered here for accumulation. First month this much, second month this plus this much, third month this plus this much, fourth month this plus this much. Accumulated depreciation. After reducing the accumulated depreciation, this will be the net book value at the end of each month of the fixed asset. Net book value will be this much at the end of each month. That's how this profile shows, guys. So if at all I post depreciation for this month, it will disappear from here. So it will only show the pending depreciations here. Okay. Is it clear for all of you how this profile is showing up on the details on this profile? Bala, Santosh,
SJP.
Seshu. Okay.
Yes, bro.
Okay, perfect then. Then it's not mandatory that you should use two depreciation profiles in a single book. But there are situations where they can use, and if they use it, this is how it calculates. Remember that one. Other than this, I have something in inquiries actually. Change history and inventory transactions. We'll see this part later. I mean, when we do such transactions. And functions I have where I have the option of splitting a fixed asset and special depreciation allowance. So we'll also see them further, how to split a fixed asset and how we can calculate special depreciation allowance on a fixed asset. So it's not majorly used, special depreciation allowances, not at all used actually to say, but there is an option in Dynamics, that's all. So that's how the basic things in books look like. Coming to Tax Act book, the depreciation calculation will be different compared to Companies Act. Suppose if I go to Tax Act book here, click on profile. See, it's not calculating depreciation at all. Why? Did we disable anything? Calculate depreciation is enabled, right? Oh, sorry. Depreciation method is also selected. Save. Profile. No, it's not showing. Did we miss anything? Yeah, we missed this one. Giving the net book value of, the acquisition value of the asset. So that is why it's not showing. So I gave acquisition value as 5 lakhs. Now the depreciation method is 30% and I don't have any alternative depreciation method. It's empty here. Now I can see the profile. So it's 5 lakhs. So it reduces 30% for the first year. So 30% on 5 lakhs means according to our calculation, it's like this. It should be 1,50,000, right? 1,50,000 divided by 12. So 12,500. So I can see for the first 2 months it is 12,500, 12,500. From the next year, it is taking this one 475 into consideration. Upon that 30% will be calculated. That will be divided by 12, and you can see equally 12 parts of that amount. Again for the next year reducing 30, again for the next year 30, 30, and at some point you will have the end after 5 years. So starting from 2021 November to October 31st, 2026, 5 years is completed, right? So the entire depreciation value remaining is showing as depreciation amount here. As you can see, full depreciation it is showing here. So currently we have some new features to not to fully depreciate an asset. You have an option again in the fixed asset depreciation profile. Actually, fully depreciate option you have here, this one, full depreciation. If you say no to full depreciation, it will not depreciate the complete amount. In the end, whatever will be the remaining, that will be remained. But in the Tax Act, normally they will fully depreciate it. But if I don't do it, suppose full depreciation is disabled here, I'll refresh it here, calculation. Then I'll go to profile. So this time at the end, come on, why it is showing like this? So it's not depreciating, you can see. So full depreciation was done somewhere in 2042. Something like in 2045 something. But normally depreciation would stop here actually. Where in 2026 at this point, where 26 October, right, this one, until here it is calculating. But if I enable that full depreciation, entire depreciation amount, entire the remaining amount on the asset, it will depreciate for the end of that period, like 31st after completion of 5 years. But I'm not understanding why it is extending more than 5 years here actually. Generally doesn't extend, but it's calculating 30% again, 30% again until that it's fully depreciated to 0. So that's how we can do it if you want to, or you can stop depreciation calculation from that period if you want to. So it will stop automatically, I think, from the 26th, since number of depreciation pending will be stopping right here. Depreciation pending will stop, so that it will stop automatically. Or I can change it once again. Let's click it here to full depreciation. Save it. Go back. Refresh. Again go to profile. This time it will end by 5 years again. Yeah. Fully depreciating it at the end of the 5th year. So that's how we can differentiate the two books, and depreciation calculations will be different in two books. Okay, so let us We can post an entry actually, but let's create 2 more assets actually for today. Tomorrow we'll post that acquisition entries and all. So I'll create new asset. See again. I'll select this asset as vehicle again. So I can see vehicle number 2 automatically taken. So I can give it another name here like Ashok Leyland. It's not Leyland actually, it's Leyland only, right? Anything Ashok Leyland truck. Then I can save it. Vehicle number 2 Ashok Leyland truck. You can go to books here. After creating the asset, you have both Companies Act book and Tax Act book. You can give some details if you want. Acquisition date as again November 1st if you want to. Acquisition price as 4 lakhs or any other parameters if you want to give, you can give. The same you can give in the Tax Act book as well. Acquisition price as 1st of November and the acquisition cost as 4 lakhs. So it's not mandatory. When you acquire or post transaction, automatically these fields will get updated. So this is of I can also give this actually department again as sales and marketing, and location as this time I'll give it as Bangalore location for this. So in the Companies Act also I'll update the same. Location as Bangalore and department as sales and marketing. Perfect. I can close it. So I can create fixed asset in such a way. So suppose if I want to create another Benz truck, so almost I'm buying similar Benz truck actually. Similar Benz truck if I'm buying, I want all the details on the Benz truck that I gave, model, make, everything. I want that details to be reflected into the new fixed asset I create. So I have this option called as copy fixed asset. If I use this option copy fixed asset, another fixed asset will be created exactly like the same fixed asset. Suppose if I click on here, copy fixed asset, see vehicle number 3 is created, same name Benz truck. So you can give it as Benz truck number 2 if you want to. Same name, same location ID is copied. If I open the fixed asset master, I can see all the fixed asset details. Unit cost as 5 lakhs, quantity, then the guarantee date, maintenance date, model, make, everything will be copied into this particular fixed asset. All the location details, department, everything is copied. And you can also see books also copied. The details on the books also will be copied. Acquisition date, pricing, this one depreciations, everything will be copied automatically. If at all I use that option of copy fixed assets. Normally that option is more feasible when suppose on a single day I'm buying 100 computers. Suppose I want to create all the 100 computers at a time. So separately, and the details of all the computers are same, means the pricing is same, depreciation is same, everything is same. Then I can use this option copy fixed asset. Like I can create one computer 1. So click copy, computer 2, computer 3, computer 4 will be created. Like on 100 computers I can create easily without manually entering all the details. Every detail will be copied onto all the assets, like similar assets when I have, so I can use them. Bunch of assets when I buy at a time. So because when you buy at a time, then only you will have same acquisition date, right? Otherwise you will have different acquisition dates. So that's how. Clear with this option, copy fixed asset for all of you?
Yeah.
Okay, we can also create one more fixed asset if you want to. So I'll just select the group as F&F. And this one, furniture and fixture number 1. So I'll just call this one as sofa set. Okay. Then it's all same. I'll just save it. So that's all the information that I want to give. I can give unit of also here if you want to. Like one sofa set, right? One. I can say. So if there are 3 sofa sets, you can say yeah, quantity is 3 each. I mean 3 sofa sets you have within this asset. You can say, and you go to books, can give the details of acquisition if you want to, or they will be automatically updated if you buy it on some day. So that I'm not giving anything here. I'll give it directly when I will acquire that asset. I'll show you how it will be updated. So that's how I can create one more asset, new one. Fixed asset group, same F and F. I'll give chairs here. So chairs, I'm giving quantity of chairs as 50 chairs at a time. So I'm creating all the 50 chairs as a single asset, not 50 assets. I don't want to create as so. 50, I'll create it as pieces. 50 pieces of chairs. You can say, you can give each also. Each is relevant actually rather than pieces. So I can give 50 chairs, single pieces. Save. That's all. Books will automatically appear here because we linked the fixed asset groups to the books once after creating books. Actually, I'll show you where we have done it in the fixed asset module only. In the fixed asset groups, actually, see, we have linked the books for this vehicle group and furniture group so that I can see current and tax here layers. So in here we have linked them. Since we have linked it here, automatically these books will appear on the fixed asset that we create here. So if you don't want that, you can delete them if you want to. But without having a book linked to the fixed asset, you can't post any transactions. You should have at least one book. Without book, you can't post any transaction for that fixed asset. Remember that. Then that would be all for today maybe, and tomorrow we'll discuss more on how to acquire a fixed asset. Then we have some options here like lending fixed asset, addition of fixed asset. So we'll see all of them. Okay. And I have one more option to show you. This quick one, valuations. Normally, if you click on any vehicle or any asset and select valuations, normally you can see the valuations of the asset according to both the acts. So I can see the vehicle image here and Companies Act and Tax Act. So acquisition 0, acquisition cost 0, adjustments, depreciations, everything is 0 here. So if you sell also, it will show sale value, how much you sold it for, what is the profit and loss that you have got on this particular sale of fixed assets. You can see everything is 0 here because we did not acquire it. Tomorrow, once we acquire it, you will see the acquisition balance reflecting here, and the net book value will also show up here. So we'll see that tomorrow. You can also see profiles together at a time, depreciation profiles together for Companies Act and for Tax Act. So this is the depreciation profiles for Companies Act, how the depreciation is calculating, primary and alternative. But for Tax Act, we only have one depreciation, right? Only one, no primary, no alternative, single method, reducing 30%. So accordingly, how it is calculating. So you can compare both of them here. Suppose for this particular period, 30-22, 30-22, you can see what is the net book value of the asset according to Companies Act. It is 4,19,000, but according to Tax Act, it is 4,03,000. That's how we can compare and see. So this is with this one. So you can again change it back to balances or profile. Balances means it will show the balances. Profile means it will show how the depreciation is being calculated. That's all. Tomorrow we'll see few options else, and we can also post some transactions or acquisition, how to acquire a fixed asset through multiple ways. I'll show you tomorrow. That would be all for today's class, and we'll meet in tomorrow's class, guys. Good night.